Welcome to This Explainer. Today, we're unpacking a total game changer for how the oil and gas sector approaches capital allocation and risk management. We're doing a comprehensive overview to introduce the Modus Value AI Command Center, which you might also hear referred to as the ValuePro AI framework for oil and gas. If you've ever felt like your traditional static financial models just aren't capturing the crazy volatile reality of your energy portfolio, well, you're definitely in the right place. We're going to explain its significance and see exactly how this platform helps analyze massive complexities, acting as an intelligent command center for your most critical investments. Let's dive in. Here's a quick roadmap for This Explainer. First, the oil and gas challenge. Second, the AI command center. Third, the 3 neural layers. Fourth, the continuous intelligence loop. Fifth, inside the control tower. And finally, number 6, strategic impact and action. Section 1, the oil and gas challenge, navigating chaos. Let's just jump straight into the immense pressures of modern energy investment. Oil and gas investment decisions today sit at this absolutely wild intersection of uncertainty, scale, and speed. We've got relentless price volatility in benchmarks like Brent and WTI that completely alter revenue expectations overnight. We have sudden geopolitical disruptions fracturing supply chains. Then you add the escalating weight of regulatory and ESG pressures, think carbon pricing, decommissioning liabilities, all layered on top of projects that are already intensely capital heavy with decades-long payback cycles. When a single geopolitical headline can literally wipe billions off a portfolio's valuation in minutes, traditional static modeling, it simply cannot keep up with that level of dynamic turbulence. And this quote right here hits the nail on the head. The glaring flaw of relying on static spreadsheets and delayed data is simple. You end up with misallocated capital, hidden risks, and massive missed opportunities. In fact, relying on broken spreadsheet logic and disconnected data costs the global energy sector billions in leaked value every single year. It totally blindsides leadership with operational delays and misses fleeting market windows. Section 2. The AI Command Center, a dynamic solution. So, let's look at the fix. It's really the old way versus the new way. The old way relies on, scratch that. It relies on overconfidence in a single price forecast. Plugging in an oil price of, say, $75 and just hoping for the best. The new way, the Modus Value AI Command Center, is a dynamic, AI-powered decision system. It doesn't rely on a single static input. Instead, it brings together financial, operational, and external intelligence into a multi-layered, probabilistic system that actually adapts as the real world changes. Section 3, the 3 neural layers, the brains of the operation. This AI architecture breaks down into 3 distinct, highly interconnected hubs. First up, we have the ETNN, the Enterprise Transformation Neural Network. Think of this as your strategic and financial brain. Its one and only focus is answering the question, are we creating value? It takes all your core financial variables, your price decks, discount rates, inflation curves, and resolves every single project in your portfolio into net present value, internal rate of return, and a complete risk distribution profile. So, the ETNN is your core analytical engine. It handles end-to-end value chain analysis, project lifecycle planning, and advanced probabilistic simulations. It is essentially the ultimate financial truth teller for your strategic investments, making sure your capital is actually yielding the expected returns. Next, we move to the EON, the Enterprise Operational Neural Network. This is the execution brain, answering, can we deliver efficiently? This is where static models usually fall flat on their face because they disconnect from operational reality. The EON tracks real-time performance, like a rapid-fire checklist of your daily headaches. Drilling efficiency, non-productive time, lifting costs. It's the layer that catches early delays and cost overruns way before they destroy your project's ROI. And the third layer is the EXNNN, the External Intelligence Neural Network. This is your external brain, constantly asking what is changing outside. It tracks the largest sources of external uncertainty that you have no direct control over, but absolutely must navigate. We're talking global demand shifts, interest rates, environmental restrictions, and crucial geopolitical risks like trade sanctions. This external brain is absolutely vital because it feeds probabilistic distributions regarding those volatile elements directly into your financial models. It ensures your strategy isn't just operating in a vacuum, but is constantly stress tested against real-world global realities, keeping you at least one step ahead of the news cycle. Section 4, the continuous intelligence loop. Having three brains is great, but the real magic happens when they talk to each other. This closed-loop intelligence flow is what gives the platform its massive edge. The external brain updates uncertainty distributions based on global events. The financial brain takes that and runs fresh simulations to see the impact on your cash flow. Then the operational brain validates if execution is actually feasible under these new parameters and sends real performance data right back into the loop. It is continuously, relentlessly adaptive. Consider the immediate chain reactions here. If operations detects lower uptime on a rig, it instantly feeds that to the financial layer, which dynamically reduces projected revenue. A CapEx delay in operations, it automatically shifts the expected cash flows in the financial model. A real-time cost overrun immediately calculates a lower internal rate of return. There's no waiting around for end-of-quarter reports. The impact is literally instantaneous. Section 5. Inside the control tower, real-time governance. Let's look at what the executive actually sees on the screen. The control tower turns all that chaos into order through 4 structured steps. First, it rigorously evaluates the value score against the operational and external risk scores. Second, it dynamically groups these projects into strategic portfolios based on geography, risk profile, or life cycle. Third, it simulates sweeping what-if scenarios across the entire portfolio. And fourth, it outputs clear decision actions. Through that evaluation logic, every single project in your portfolio is continuously assessed and dynamically sorted into one of 4 highly actionable strategic buckets. Value accelerators have strong returns with manageable risk. Conditional bets offer high potential but massive uncertainty. Operational fixers require you to tighten up execution to unlock their value. And value destroyers? They show capital at risk with limited upside, telling you to immediately rethink your position before it drains the bottom line. Section 6, Strategic Impact and Action. Finally, let's talk about the ultimate bottom line. Over 10,000. Think about that for a second. That represents the thousands of probabilistic Monte Carlo simulations the system runs. The goal here is not pinpoint accuracy on an unpredictable future, because that's impossible. The goal is decision robustness under uncertainty. By running 10,000 plus scenarios, randomizing high-impact variables like oil prices and CapEx overruns, the system maps out the actual probability of success. So decision makers don't just get a single misleading number. You get distribution-based insights. You instantly understand your P10, your P50, and your P90 net present value scenarios. You see the absolute worst-case downside risk and your probable base cases, giving you the full spectrum of risk visibility. And the command center doesn't just drown you in data. It acts as an intelligent decision engine. It takes all of those probabilistic simulations and translates them into direct, automated go or no-go recommendations. It tells you clearly whether you should invest, hold your position, restructure the deal, exit the asset entirely, or accelerate capital deployment to capture a fleeting market window. For directors and leadership, the strategic impact is profound. It delivers rock-solid confidence in capital allocation, completely eliminating the guesswork. It provides full transparency into your portfolio's risk exposure. It flawlessly aligns your high-level financial strategy with on-the-ground operational execution. And it grants you the agility to respond to sudden market or geopolitical shifts way faster than your competitors. I want to conclude with this provocative thought. When the market shifts overnight, does your portfolio intelligence shift with it? Are your capital allocation decisions static, trapped in last month's spreadsheet? Or are they alive, constantly learning and adapting? The Modus Value AI Command Center represents a massive shift toward dynamic, data-led intelligence. It's time to stop forecasting the future and start commanding it. Thanks for joining me on this explainer. I really hope this empowered you to rethink how you manage risk and reward.